Yer, welcome aboard, everybody. Welcome back. It's your boy King Smitty, and I'm just here with a brand new stock that I think has potential to do some huge numbers in the next 3 to 5 years. But before I get into that, I want everybody to just take a second to like, subscribe. Your boy's trying to make it to 100 subscribers on YouTube. Go ahead and show some love. I'll give you a second. That's enough. But for real though, the stock I want to talk to you about today is Fntn. It's ticker symbol FTNT. Current price is at $343.51. And Fntn, it offers cybersecurity solutions to a variety of organizations. And it offers cybersecurity, well, not just cybersecurity, but it offers cybersecurity to enterprise, large enterprises, small businesses, the government, different organizations of the such. And it has its own automated self-healing network with AI-driven security for efficient operations. Fntn is supposed to be the number one. It ranks number one in the most security applications shipped worldwide. Right? So it's a pretty big company. I believe at first Fntn was a hardware and software company. It's been around since the year 2000, I believe. So it's about 20 years old. And it kind of revamped itself with the cybersecurity. Because, the world's going cyber, it's going digital. You got the metaverse, you got all these cloud computing. So they decided to hop on the wave. You keep using these same old tactics, you're going to get worse and worse results because the world is evolving. For example, you see a lot of brick and mortar stores are going out of business because everybody's starting to shop online. Nobody's going inside the actual store anymore. So why waste money on those employees and rent? Because a lot of these places don't even own the building they're in. So you're wasting money on employees and rent. And everybody else is buying their stuff online. So they're kind of keeping ahead of... We're trying to keep up with the curve and keep up with the wave. So they're going digital. They have a market cap right now of $56.2 billion. This company is worth a lot. And I like this company. It's not one of my metaverse plays or picks. I believe it could be tied to it though. I might have to do a little more research as far as their link to the metaverse, if they even have one. I'm sure that I would hope they do. But this play is going to be huge. They are, like I said, they are in the cybersecurity, which is an expanding market. And they're also, not only are they in the cybersecurity, in the cloud computing market, as far as security wise, but they're also in 5G, which is another expanding market. So they have more revenue to make. The revenue is there. The demand is there for the company. So you don't see this company disappearing no time soon, especially with a $56.2 billion market cap. It has a diversified revenue base across geographics, customer size, and industry. I already told you they're working with small businesses, large organizations, government organizations, and not only here in America, but across the world, they're doing this. So, like I said, the demand is real for the cybersecurity. There's cyber threats every day, all the time. Let's see. Example of its cloud security are... Its cloud security are available for deployment in public and private cloud environments, including, here we go, Amazon Web Services. We all know about Amazon, Microsoft Azure, Google Cloud, Oracle Cloud, Alibaba Cloud, IBM Cloud, and VMware Cloud. It's available in all of those. And those are like the biggest of the biggest cloud networks that we have as of 2021, right? So, like I said, the demand is there. They're available everywhere. The institutions, it's not just one, holds 68.9% of the shares. Now that's really high, and that's a little bit higher than I'm used to investing in, shall I say? But it's not all bad, because with that, you don't have to worry about liquidity. You don't have to worry about that stock just tanking like that, because when these institutions, hedge funds, retirement funds, 401ks, like your employer, they might have some of this stock in their 401ks or their hedge funds or whatever. When they put a lot of research in these stocks, so they're not just gonna get in and get out, because they have like billions and millions of dollars. So they can't just be as swift as someone like me, who might buy like up to 10 shares. I can just sell these 10, get out. But they have multiple millions of shares, so they're looking for something for the long haul that's going to bring the most money to their clients. So you don't have to worry about them just, you have to worry about the price just straight dropping and then coming back, like some of these speculative plays or a lot of growth stocks might see. So the institutional holdings isn't the worst. And let's take a look over here. Okay. And so we're going to look at this stock right here. Let me scoot over. And you can see that the stock has been in a huge uptrend, right? And the stock is it's not at the 52 high or all-time high, but it's right around the corner. You feel me? All-time high was hit November 5th. That's literally like a little over a week ago. So I'm not trying to buy it at the all-time high, because what goes up comes down. Excuse me. So let me put this horizontal line. I'm looking to buy in right here, $321.17. That's where I'm looking to get my first position at. I'm hoping that it has a little bit of a fall, a little bit of a drop. You can see the RSI is not oversold and it's not overbought. It's more overbought than oversold, though. It's not neutral. So hopefully we can get it down to a little oversold. Like I said in one of my previous videos, I am expecting a market pullback, an overall market pullback, not a correction, not a crash, at least not just yet. I mean, it is possible that it could come. I don't know the future. I'm not a financial advisor, of course. But I am expecting a market pullback a little bit. And during that pullback, if it can pull back just to $320, $321, I'll be cool with that, because you can see 321, it was a previous resistance line. You see, it comes up, it gets knocked back down. It comes back up, it gets knocked back down. Right? And when it gets knocked back down, it even went under, the 50-day moving average. But then when it comes back up, it breaks it. And when it breaks it, that's like a buy signal for some people. They might not buy it on this candle, but they might buy it on this candle at 331. It may be right at the 355 or whatnot, because it broke resistance, and you really don't know how far it's going to run when it breaks resistance. But once resistance then becomes support. And you can see right here, once it broke, it went up to all the way to 343, and it came back down. And it hit 321, and it kind of chilled. It didn't even go underneath it, really. Let me zoom in a little bit. And you can see it didn't even go underneath it. It chilled there. It closed there on October 27th. And then October 28th, it opened up there, and it went back up. It stayed up, came back down, touched it, went right back up. So it's showing, it's touching multiple times. That line is there, so that's why my first buy signal would be right there. That's where I'm gonna try to buy it. My second one is gonna be roughly down here at 287. I would average my price down because like I said, I see this going somewhere in the next 3 to 5 years. So if this stock does come down even more than 321, 287 will be roughly my next buy zone, my next buy mark. Average my price down. Hopefully at that point, what my average price will probably be in the three teens somewhere. 313, 314. This is off the top of my head, no calculator right now. But yeah, so we can come over here. You can see the volume is, it's not bad. It's not any spikes going on in volume. So we'll have to see exactly what was going on with it. And you can see the market analysts have a average price of $369.35. The high is $435 and the low is $314. See if it hits that low, which probably not too many analysts has it going that low in the next year or so. My first buy zone to be hit. I'll be in there. Now, if a crash or unexpected correction happens, then I'm sure my other one will get hit as well, around the 280 mark. So I don't want to get in right here where it's at 43, because like you can see right here, it's only a 7.52% upside from there. So that's why I said I'm trying to get in a little bit further back. And you see how many analysts are covering this? It's 12 buys, 7 holds, and only one person says sell. So really not too worried about that. You can see the dates of it. And let's go to the stock analyst. You can see it has a smart score of 9. It's expected to outperform the market in this next year. And that's the kind of stocks I'm looking for. Ones that's going to outperform the market. A lot of people are very bullish on this. Not too many negative sentiments on there. So the momentum, it's been up 188.25% in the last year, 12 months. Return on equity was 60.56. So I'm not too bearish on this. You can see the free cash flow. This is straight from the Fortinet's investor presentation. You can see it that it's 988 million. That's how much free cash flow. That's how much money they have after all their business expenses and operation costs. After all of that's taken care of, they still have $988 million. That was in the third quarter of 2021. So, like I said, I'm excited about this one. I'm not telling you to buy it. If you have it, I'm not telling you to sell it. Like I said, I'm not a financial advisor. I'm just doing a little research. Of course, do your own research and due diligence before you go and jump in the stock. Don't buy a stock because somebody on Facebook or somebody on YouTube tells you to do it. Definitely do your own due diligence with it. You feel me? But if you've been here since the beginning, so I say, go ahead and like and subscribe this video. I appreciate y'all rocking with me. You feel me? But I'll see y'all with the next one. We are on our way to financial freedom, right?